All right, guys. So now when you're trading names with, let's say, a wide spread, all right. So for example, we're taking a look at this price line here. Notice she's got a point spread here on the stock, and if you take a look at the option here that I'm short currently, you got a point spread here too. Okay, now things get pretty dangerous when you're trading low liquidity, high spread names like Priceline, like Chipotle, any names that are well over $300-400. This is generally the option that you're going to see. Very, very light volume, very low liquidity here on both the bid and the offer. So that means you gotta have some finesse here as far as sending out your orders. Okay, so for example, I am short calls in this stock right now. I'm short the 1130 calls. Priceline currently has been on a 100-point run, and I'm basically more or less saying she's kind of topping out here, and all this premium is going to dry up. Okay, so in a sense, I'm saying this 1030 call is basically going to go zero. Basically going to go to zero once we get a significant pullback on Priceline. So what do I want to see on the stock? Well, I don't want to see any aggressive buying on the offer. I want to see offers stepping down. You see that? Look at how the 69 offer here just stacked up with a bunch of offers. A bunch of people wanting to sell. I want to see things like this. And then when they do stack up, I want to see them hold that area, and I don't want to see buyers really just aggressively picking off offers. So I don't want to see anybody buying 1126, 66, 69, 97. I don't want to see anybody buying aggressively over 1127. If so, this option is going to spike up on me, and I'm going to have to sit through some pain. Now, when you actually do go to send an order out in an option that has a wide spread like this, it's best to try to limit closer to where you think you're going to be picked off. This is called the lean in that option. So right now we can see that Priceline is floating lower. We can see that the lean is more towards the bid. So if I wanted to buy options in this, I could probably get a fill around $10 on this option, simply because the lean is closer to the bid side. Okay, you can see how this offer dropped down to 1010. If I tried to get an offer filled right now at $10 on ARCA, I would get filled immediately. See, that order got filled immediately. Instead of 74 contracts I'm short, now I'm short 73 contracts. Now we can also see my tape continuing to prove in this sort of analysis here. The short call is okay for now. We see offers continuing to step down. You look at the transactions here, they're going off on the bid. So currently speaking, I'm okay to kind of hold on to these short calls a little bit longer. One thing to note here with low liquidity and very low volume names is that you could end up moving the stock just by your actions in the option. And I don't want to do that today simply because I do have a significant position in this. But let's say I were to go ahead and short, or let's say buy back a significant amount of contracts close to the bid. What that would do here is show the market makers and show the whole world basically that there is a buyer now in this option here that's going to step up to about $10.30. You might cause a knee-jerk reaction in the stock. And remember, whoever sells you those options, remember, if I launch out a buy order here for 1030, if somebody sells that to me, well, then they got to go in the stock and hedge, okay? So most of the time, you're playing with the market makers. So anytime they go ahead and fill an options order, provided that it's sizable here, 10 contracts or more, in a low liquidity, name like this, they go ahead and hedge in the stock. So subsequently, you're going to see a move in the stock. All right, so anytime, guys, you're playing stuff with wide spreads, you got to be careful. Take a little bit more time limiting on both the bid or towards the offer, towards the bid. Try to get things filled instead of aggressively just picking off, an offer or a bid. So, for example, let's say you wanted to go ahead and short this thing. Right now, the only place that you could get short right now, according to just the book here, is if I sell this 960. these guys are willing to buy here at 960, so I know I can sell there. But that's 60 cents below the current offer. So immediately when I sell that size at 960, I'm going to be down in that position 60 cents. Okay, so you got to think about that before you hop in these options. All right, so this is just a little taste of trading low liquidity names, very high price stocks like Priceline.